Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel. I'm going to give you an updated ASML stock analysis today. ASML is the leading photolithography system maker in the world. ASML is known for making the most advanced deep ultraviolet DUV and extreme ultraviolet EUV systems. These DUV and EUV lithography systems are used by chip makers such as TSMC, Samsung, and Intel to make the most leading-edge semiconductor chips. At the time of making this video, ASML stock is down 48% from the most recent peak. In fact, the entire US stock market is in a bear market because of the high inflation rate in the US and because of the US Fed's aggressive rate hikes. All the semiconductor stocks are down substantially from their most recent peaks. The iShares Semiconductor ETF is down 34% from the most recent peak, and the Nasdaq index is down 28% from the most recent peak. In this video, I'm going to talk about is ASML the best semiconductor stock, and is ASML stock undervalued now? You will learn about these topics in this video. First, I will talk about ASML's biggest risk going forward and whether there will be a slowdown in the semiconductor industry. Second, ASML's economic moat and long-term business prospects. Third, ASML stock's valuation. You'll learn how to calculate ASML stock's intrinsic value. And fourth, why buy ASML stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over 7 figures over time. With your support, we'll be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Take a look, let's start. Before talking about ASML's economic moat and long-term business prospects, I think it's important to understand ASML's biggest risk first. First, ASML's biggest risks are supply chain issues, labor shortage, rising costs, and high inflation that are affecting the entire semiconductor industry. This from the most recent earnings. It explains ASML's current macro risks. In the current environment, it's also appropriate to adjust how we may be impacted by rising costs this year. We're not immune to rising costs. There is pressure on labor costs as the global job market for engineers is tight, and there's a competition for talents. Costs related to components in the supply chain are also increasing due to higher material costs, including additional fees to secure parts. Transportation costs have increased due to rising fuel costs and changing flight routes. Energy contracts and renewable energy help limit the increased energy cost impacts. We clearly see pressure on margins due to these cost increases, which we expect to translate roughly to a 1% impact on gross margin for full year 2022. In summary, we currently expect gross margin to be closer to 52% for the year. Even though ASML is facing high costs because of supply chain issues, higher material and component costs, high transportation costs, and labor shortage, the impact on ASML's gross margin is only 1% for the full year of 2022. Management expects that ASML's gross margin will hit 52% for the entire year of 2022. This is still a very high gross margin despite all these supply chain issues and high inflation costs. Historically, in the past 5 years, you can see ASML's net sales, gross margin, and operating income had been growing consistently every year. ASML's gross margin was in the 40% range. Now in the most recent quarters, you can see ASML's gross margin was in the 50% range. This shows ASML can pass most higher costs to its biggest customers, TSMC, Samsung, and Intel, and still maintain a 50% gross margin. This is because ASML is a monopoly in the EUV market and a near monopoly in the DUV market. There are other macro risks that are outside of ASML's control. For example, the US economy is likely heading into a recession, and the semiconductor industry is expected to slow down in the upcoming months. According to this article here, several major customers, including Apple, Nvidia, and AMD, have reportedly reduced their wafer orders from TSMC, the largest contract semiconductor foundry in the world, because these major tech companies expect that the market is likely heading into a recession. They expect that the demand for their products is likely slowing down in the upcoming quarters. Many analysts believe that the upcoming US recession will likely cause a slowdown in the semiconductor market. According to the TrendForce report and this article here, many semiconductor semiconductor foundries are facing more order cancellations or wafer reductions from their customers. These order cancellations are mainly microchips that use much more mature process nodes. There is still a large demand for the most advanced 7nm and 5nm chips, so these most advanced chips will be the least impacted. I believe ASML's biggest risk is overcapacity. ASML is planning to expand its lithography capacity aggressively going forward because management believes that the demand for microchips, especially the most leading edge 3nm and 2nm chips, will increase significantly between now and 2030. If the semiconductor market slows down in the upcoming months, ASML may run the risk of overexpanding capacity in building EUV and DUV lithography systems for its customers. Another major risk is geopolitical risk. At the time of making this video, ASML is banned from selling EUV systems to China because the US does not want China to become the chip-making leader in the world. Taiwan's TSMC and South Korea's Samsung are the chip-making leaders in the world right now. ASML's DUV and EUV systems are the most important machines for making chips. To prevent China from becoming a chip-making leader, the US is pushing the Netherlands to ban ASML from selling the most advanced DUV lithography systems to China. This is from Bloomberg. ASML's sales could narrow by 5 to 10% if it's banned from selling deep ultraviolet DUV tools in China. ASML is already unable to ship its most advanced extreme ultraviolet or EUV lithography systems, which cost about 160 million euros per unit, to China because it cannot obtain an export license from the Dutch government. In my opinion, I don't think the Netherlands will completely ban ASML from selling DUV lithography systems to China because China is one of the Netherlands' most important trading partners. According to Morningstar, ASML has a very large economic moat because of ASML's intangible assets around equipment design expertise, in addition to research and development cost advantage required to compete with the business of leading-edge chip makers. ASML's DUV and EUV lithography systems are some of the most complicated machines in the world. It's nearly impossible for other competitors to copy ASML's DUV and EUV lithography systems because developing these technologies are very capital intensive and it takes many years of R&D to develop these photolithography technologies. For example, ASML took more than 2 decades to develop its EUV technology. ASML also invested more than $6 billion in EUV research and development over 17 years. This from CNBC. ASML has a monopoly on the fabrication of EUV lithography machine, the most advanced type of lithography equipment that's needed to make every single advanced processor chip that we use today. The machines that they produce, each one of them is among the most complicated devices ever made. ASML has a monopoly over EUV systems because it's the only maker of EUV systems in the world. ASML's EUV systems are used by the largest chip makers, TSMC, Samsung, and Intel, to make the most leading-edge 7nm, 5nm, 3nm, and the upcoming 2nm chips. Here's the important part you want to know. That shows ASML has a monopoly in EUV systems and a near monopoly in DUV systems. Typically, ASML's EUV system is up to 200 million each. The next-gen high-end EUV system will be more than 300 million each. Only a few semiconductor companies in the world, such as TSMC, Samsung, and Intel, can afford to buy these EUV machines from ASML. ASML's 2 other main competitors are Nikon and Canon from Japan. Nikon and Canon are much smaller than ASML. As far as I know, they do not have the financial resources and expertise to develop their own EUV systems. Instead, Nikon and Canon make their own deep ultraviolet DUV lithography systems that compete with ASML's DUV systems. According to Bloomberg, ASML had a 95% market share in DUV systems in 2021. In my opinion, I believe it will take years or even decades for other companies to develop their own EUV technology. In terms of long-term prospects, I believe ASML's business will continue to grow for many years because there's a large demand for ASML's DUV and EUV systems. For example, at the time of making this video, ASML has a very large backlog of 500 plus DUV systems that need to be shipped to customers. According to the latest earnings call, ASML ships around 60 DUV units every quarter. This means it will take ASML 2 years or more to finish shipping the current 500 plus DUV system back orders. According to management, ASML is supply constrained. The demand for DUV and EUV systems far exceeds ASML's current capacity. For example, if you want to order a DUV system from ASML, it will take ASML around 2 years to ship you a DUV system. This from the most recent annual report. You can see ASML's number of lithography systems sold have been increasing consistently in the past 5 years. ASML's net booking value had also been increasing consistently in the past 5 years. The net booking value is a very important metric because it shows all the system sales orders from ASML's customers. At the time of making this video, ASML's net booking value or backlog is at 29 billion. Going forward, as long as ASML is booking more system orders and selling more systems every quarter, ASML will continue to have higher net sales, higher operating income, higher operating cash flow, and higher free cash flow every year. This from the most recent earnings call. It shows the enormous demand for ASML's DUV and EUV systems. Management said this: "We continue to see unprecedented customer demand across all market segments from both advanced and mature nodes, driving demand across our entire product portfolio. We're running at maximum capacity and expect demand to exceed supply well into next year. For the full year, I think demand is very strong as evidenced by the order intake that I just talked about and also the order book. So the demand outlook is very strong. So once again, as we said in Q1, this year will be very much supply constrained. And on the supply side, we're working very hard to navigate at the supply chain issues that everyone is dealing with, our industry. The entire industry, we're working very hard to navigate that. So in light of that, we still expect revenue to be up around 20% for 2022 in comparison to 2021. If you then look at the different products and the different businesses, on the EUV side, we expect to ship 55 EUV systems. We won't get revenue for all those 55 systems because we're expecting quite a few EUV systems to be fast shipped in Q4 at the end of the year. So not all of the revenue of those 55 systems will be recognized in this year. Some will be recognized in 2023, but still also in light of that, we still expect that EUV revenue for the year will go up approximately 25%. If we then look at the non-EUV business, we expect that to go up a bit more than 20% in comparison to 2021. I think the overall picture of very strong demand that continues to go on, and as we said, that's premised on two main drivers. First, it's the secular driver. It's the secular growth that we see around the broader and broader application of semiconductors in many different industries and products. So that's the main driver, I would say. We continue to see that develop very favorably. And then secondly, as we also discussed, it's this whole trend around technological sovereignty. You really now see that many of our customers are becoming more and more firm and more concrete in the plans they have for building fabs across the globe. That's really manifesting itself. That is going to lead to incremental demand for our products in the years to come. With multiple countries pursuing technological sovereignty, we're now seeing a number of announcements from customers for new fabs in the coming years in support of this global trend. These announced investments are expected to have a positive impact on the medium-term demand. Here's the important part that shows ASML is planning to expand its capacity going forward because ASML's current capacity is not enough to satisfy all the customer orders. As this unprecedented demand is exceeding our capacity, ASML and supply chain partners are planning to actively add capacity to meet future customer demand, as communicated during Investor Day last year. As mentioned last quarter, we see a need to further increase our output beyond this level in order to meet the stronger and longer market demand to support an industry that is expected at least double by 2030. With the goal of adding more capacity, we're investigating the feasibility of increasing our annual capacity by 2025 and to around 90 EUV 0.33 NA systems and 600 deep UV systems. We're also discussing with our supply chain partners to secure a capacity of around 20 EUV 0.55 high NA systems in the medium term. Bear in mind that this translates to what we currently feel our maximum capacity goal should be and may therefore not be a final output plan. In the short term, even if the semiconductor industry slows down in the upcoming months because of the upcoming recession or other macro risk, I believe the demand for the most leading-edge DUV and EUV lithography systems will continue to grow over the next decade. This is because all the major tech companies such as Apple, Nvidia, AMD, Intel, Samsung, and Tesla are all looking for the most leading-edge chips that are much more power efficient, much more powerful, and smaller in size. High-performance computing, servers, data centers, cloud computing, 5G smartphones, GPUs, CPUs, APUs, DPUs, autonomous driving electric vehicles, game consoles, gaming PCs, AR and VR devices all require the most leading-edge chips. The largest chip makers in the world, TSMC, Samsung, and Intel, will continue to buy DUV and EUV systems from ASML because they want to continue Moore's law and produce the most leading-edge chips for their customers. Also, the United States, China, and European Union all want to become chipmaking leaders, so they do not need to rely on Taiwan and South Korea to manufacture the most leading-edge chips. At the time of making this video, Taiwan's TSMC and South Korea's Samsung have a combined market share of 70% in the global foundry market. All these secular trends benefit ASML in the long run because they increase the demand for ASML's DUV and EUV lithography systems. I want to show you how to calculate ASML stock's intrinsic value here, so you know whether the ASML stock is currently undervalued, fairly valued, or overvalued now. If you want this calculator, you can download it in my Patreon blog in the video description. These are the key assumptions in this calculator. First, I define ASML's intrinsic value as its future free cash flows discounted to the present day. The discount rate is 10%. This is slightly higher than the 8.8% cost of equity from Finbox.com. You can use a higher discount rate here if you want to be more conservative. ASML's most recent 12 months of free cash flow is 10.21 billion euros. Based on the biggest risk and the long-term business prospects I talked about earlier, I expect ASML's free cash flow will grow at a compound annual growth rate CAGR between 10% and 20% over the next 5 years. According to Seeking Alpha, ASML's forward average growth rates are expected to be between 16% and 23% over the next 5 years. To calculate the terminal value at the end of year 5, we assume both the perpetual growth and exit multiple models here. Then we take the average of both models to calculate the terminal value. We will go over these 3 case scenarios here: worst case, normal case, and best case scenarios. Under the worst case scenario, we're using a compound annual growth rate CAGR of 10% over the next 5 years. If we forecast ASML's free cash flow for the next 5 years and discount the free cash flow to the present day, ASML's intrinsic value should be around 181 billion for the entire company, or $452 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're using compound annual growth rate CAGR of 15% over the next 5 years. If we forecast ASML's free cash flow for the next 5 years and discount the free cash flow to the present day, ASML's intrinsic value should be around 292 billion for the entire company, or $552 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're using compound annual growth rate CAGR of 20% over the next 5 years. If we forecast ASML's free cash flow for the next 5 years and discount the free cash flow to the present day, ASML's intrinsic value should be around 270 billion for the entire company, or $671 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, ASML's intrinsic value should be around $557 per share. This means I believe ASML is undervalued by around 19% at the time of making this video. In comparison, Morningstar has given ASML a much higher fair value at $800 per share. This means ASML stock is likely substantially undervalued at the time of making this video. So will I buy ASML stock? Yes, I will continue to buy more ASML shares going forward because I believe there will still be a very large demand for ASML's EUV and DUV lithography systems over the next 10 years. And because ASML is a monopoly in EUV and a near monopoly in DUV systems. I already have the ASML stock in my portfolio here. It's down 33% at the time of making this video. I'm not worried about it because ASML's fundamentals have not changed. In my opinion, the semiconductor sector as represented by the iShares Semiconductor ETF is oversold. The US stock market is in a large bear market. Eventually, the market will recover quickly once the US inflation starts slowing down and once the US Fed starts easing its interest rate hikes. Now, all these are only my opinions and my analysis based on my research. They are not financial wise. There are always risks associated with investing. It's important to always invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.